Today we are going to look at how you draw up certain components of the master budget for a manufacturing company. And we are going to use the ICB's assignment to question 2 as the guideline on how to do that. So let me quickly show you by sharing my screen here how this question is set out. Okay. Cost and Management Accounting Sample Assignment 2, Question 2, Components of the Master Budget. You are given the sales, the expected sales in units of your product that is boot. I'm going to assume if the product is called boot, I assume it's boots. Okay. For the period November to March 2019 to 2020. And you're going to expect to sell 37 in November, 48 in December, 61 in January, 47 in February, and 45 in March. They give you a lot of information. They give you the selling price of the manufactured products. They tell you how much leather and labor hours is required to make a pair of boots. You are given your labor cost and your material cost. Then you are given some expected overheads, being the manufacturing overheads and the sales and admin overheads, and you are given additional information. So it says, according to a physical stock count, at the beginning, look, it's the end of the previous quarter that it happened, 31st October 2019, we are looking at 1 November 2019. So nothing will change at midnight. So at the beginning of your quarter, you have 50 kilograms of leather at hand, and you have 52 completed units of your boots at hand. And then they give you a very important sentence here. They say the company aims to keep its inventory levels, that will be for both the leather and the finished product, the boots, at the next month's production and sales requirements. Okay, so we always want to make sure at the beginning of the month that we already have enough to cover the next month. That's just the policy, but it is important because we are going to use it. And then they say to you, prepare the following subdivisions of the master budget for the period 2019 to January 2020, as well as for the quarter. And those are the 4 budgets that you are supposed to prepare: the sales budget, the production budget, the material purchasing budget, and the direct labor budget. And now for a change, they gave it to us in the order in which we must do it. Remember, in some of our other questions, they kind of messed up the order to see if you knew in what order to do this. But now it's in the correct order. You need the sales budget in order to complete your production budget. And then once you've completed your production budget, you will be able to do your material purchases budget and your direct labor budget. Now let's look at a couple of things here. They say to you, you must prepare it for the period November 2019 to January 2020, as well as the quarter. Now look at it. November, December, January, they give you 2 additional months, okay, of expected sales. You're going to use it, but it's not what you are required to do. You are supposed to do all of this for November, December, and January, and then total it for the quarter. Those 3 months, they make up your quarter. Now, if they give you the expected sales in units, and they give you the sales price of each pair that you're going to sell, you can start with your sales budget very easily, simply by saying, let's take the number of units and multiply with the selling price. So let's do that. Okay. So here we are. I've kind of created an answer sheet for you in Excel, just to make things a little easier for myself. And we start with the sales budget. So what do we know? We know our budgeted sales. It was given. It's given for November, it's given for December, it's given for January, and we add those for the quarter. Okay. Then we are given the selling price. The selling price is 350. Didn't say that we plan to increase or do a sale at some point. So the selling price is consistent at 350. And of course, all of that was given to you. And then the only thing we need to do to calculate our sales for the sales budget is to multiply the number of units with the selling price. That's what we do. Then we get to that. And of course, at the end of the quarter, we simply add them. Because we expect 51,000 rands worth of sales of our boots for the quarter. What did we do to get to the answer? We multiplied. Okay, so the sales budget is extremely simple. Now we are going to move to our production budget. Now let's see where we start. We start with our budgeted sales again. Okay. Same thing that we had at the top there, but now we include February. And of course, we add it for the quarter again. Now, please do not include February in your quarter. Okay, you need the sales numbers for February because of something that they told you that's going to affect what's happening in January. But for when you add your quarter, it must still be 146. It cannot be any different. And where did we get all of this? Well, no, we just got, okay. Then remember, they gave you very important information. They say the company aims to keep its inventory levels at the next month sales requirements. So when we now go and we look at our closing inventory that we want at the end of the month. So at the end of November, I want enough to cover all my sales for December, which is that 48. At the end of December, I want enough closing inventory to provide for all the 61 sales that I plan to do in January. And in January, and this is why we needed it for February, I needed to have 47 on hand so that I have enough for February. And because we are doing February, we also are going to have a look at what we got for March. We got 45 that we expect to sell in March. So for February, that number there is 45. Then look at what's happening with the closing inventory at the end of the quarter. It will be the same as the end of January. Because if our quarter ends in January, we cannot add up the closing inventory for each month. It will just be what it is. It's 47 at the end of January. So that's when our quarter ends. So we will have 47 units there at the end of January. And here we had it, the budgeted sales plus the closing inventory will give us the units that we need. Now we know we still have to subtract our opening inventory. But for now, let's calculate what we need. So we simply add those up in each case for all of the months and for the quarter. Okay. What did we do? We simply added it. Okay. Now we need to subtract our opening inventory. Okay, subtract the opening inventory. Now, remember something again. We did a physical stock count. And when we did our physical stock count, it is given to us that there was 52 units in stock on the 31st of October. And I said nothing will happen over midnight. So you still get to the store on the 1st of November and you still have that 52. Okay, that 52 is there. And of course, if we have 52 there, we have 52 at the start of the quarter. Now, please, I put a negative number here in front so that I could just add the columns. But if we say minus opening inventory there, you will not have a negative number here when you do the answer in your assignments and in the exams. You will just remember to subtract. But because in Excel, I just add them by using the sum sign, I use the negative figure. Do not be thrown by that. Okay. Now, our opening inventory will be exactly the amount that we think we are going to sell in that month, because that is what the policy says. We aim to keep our inventory levels at the next month's sales requirements. So if I plan to sell 48 in that month, I need 48 on hand at the beginning of the month. Same there for January, it will be 61. Same there for February, it will be 47. Okay, and then the only thing that I can do now is I subtract the opening inventory from the units needed for each month, and then I know exactly how many units I am supposed to produce in this month. Okay, all of that I simply add. This is my production budget, the number of units that I need to produce in each month. And of course, in November, it's a lot lower than my expected sales. Well, not a lot lower, but a little lower than my expected sales, because I still had this additional 52 pairs on hand, and I was only expecting to sell 37. Okay, but for everything else, the opening inventory is exactly the same as my budgeted sales. Now I've completed the production budget, and the moment I've completed the production budget, I can now do my material purchase budget. Okay, and because we need the numbers in the production budget, that is what we start with when we do our materials purchases budget. Okay. And of course, for the quarter, we will add it. Okay, but it must be the same as what it is there. So that last line there becomes the first line of your materials production budget. Now, what is the materials that we are looking at? We are looking at leather, okay? And to make one pair, we have a requirement per unit. So to make one pair, we were told that we need 3 kilograms of leather. That does not change. Okay, we are not suddenly making shoes for giants and have to increase the 3 kilograms leather per pair of boots. It stays the same throughout. So if I have my number of units and I know how much leather I'm going to use per unit, I know exactly how much leather I need for production during the month. Okay. So I put it in for November. I include February. You're going to see I'm going to need that 135 now. And then we add it for the quarter. Let's just have a look here at where we got the information. This we got from the production budget. This was given, and we simply multiply it to get to the answer. Okay. But now we have to add our closing inventory again. And we're sitting with these conditions again. The company aims to keep its inventory levels at the next month's production requirements. The quarter end will be the same as the January end. So our required closing inventory for January will be what? Exactly what we expect to produce and use in December. The closing inventory for December will be this number here that we need to use in January. And the closing inventory for January will be the amount of leather that we expect to use in February. Now we don't have to calculate anything anymore for February because we now have all the information that we needed. But up to there, we needed to do it because we needed to use that 135 there. And of course, if we have 135 kilograms of leather at the end of January, that will be the number that we will have at the end of the quarter. It cannot change. And if we have the required production plus the required inventory, we can add that to look at the total that is needed. So simply add that to get to a total. And for the quarter, we add everything. So there we simply add. But now we still have to subtract our opening inventory again. Same thing again. I used the negative numbers so that I could use the sum. But you are not going to use negative numbers. You are simply going to subtract it. Now, the thing is, once again, we'll go back when we did our physical inventory count on the 31st of October, we had 50 kilograms of leather in stock. So therefore, our November opening inventory is 50 kilograms. For December, it is exactly what we require for production. For January, it is exactly what we require for production. But since our quarter opens on the 1st of November, whatever we have on the 1st of November is also what we start our quarter with. Okay, and then we can simply subtract the opening inventory from the total that we need for each month and for the quarter. And then we can see exactly how much leather we are supposed to buy. Now we know, okay, I need to buy 232 kilograms of leather in November, 141 kilograms in December, and 135 in January. Okay. But at what price? Well, we are lucky because we were given that. We were told that we are buying the leather at 10 Rand per kilogram. That doesn't change throughout the quarter. That was simply given. And then to see how much we are going to spend on leather, which is exactly what our materials purchasing budget is all about, we say, okay, let's multiply the total purchases by the cost price. And then when we do that, we get those amounts. And of course, we just simply add them for the quarter. Good. Then we get to our direct labor budget. Now, once again, we are going to start by using the information that we got from our production budget. Told you in the beginning, we need the information in the production budget to be able to do both the materials purchases budget and our direct labor budget. Let's have a look there. Where did we get that? Well, it was simply from the production budget. Next thing they give us is they tell us exactly how many labor hours does it take to make one pair of boots. It takes our shoemaker 4 hours to make a pair of boots, and that never changed, and it was given. Now, we cannot keep labor hours in the bank or in a storeroom like we can do with the stock. So there's no opening and closing inventories here. So when we look at the production units and the time it takes to produce a shoe, we can see exactly how many hours our shoemaker is going to spend on making shoes during each month and during the quarter. Okay. Normally there's about 160 hours in a month, so he's going to be fine. In November, he's going to have to work a bit of overtime. In December, shame, and it's Christmas time. And then in January, more or less the normal time that is going to work. Okay. So that is the direct labor hours that we need, but we need to know at what cost does the labor hours come. And it comes at 15 Rand an hour. Now, please do not phone the Department of Labor because our fictitious shoemakers are paying the shoemaker only 15 Rand an hour. We know that's way under minimum wage, but we are going to live with it because that was what is given. By the way, minimum wage at this point in time is about 23 Rand an hour. So that was given. And if we have the direct labor hours needed, and we have the hourly wage of our shoemaker, we can see exactly how much we need to pay him throughout the month. And we look at the fact that we are paying him just under 2,000 in November, 3,600 in December, and 2,800 in January, and therefore 8,460 in the quarter. Okay, how did we get that? We multiplied it. Good, and that is all we do to complete the master budget in terms of its sales budget, the production budget, the materials purchasing budget, and the direct labor budget. Thank you. So let me get back here into our recording. Stop sharing, and then next time we meet, it will be mock assignment 2, question 3. Thank you.